Well, good evening, everyone. Hey, it is Shooter Scott Henderson. It is July 13th, and we're going to go over primary waves, the global trend ETFs today. At the end of our presentation, please do review our disclosure. Now, market conditions, just a quick recap. My view is even though we are bullish, I'm taking it as a neutral approach because we're in this topping pattern, in this flat pattern. However, this rotation into small caps is kind of enticing. One thing that we had happen this week was the Dow closed above 40,000 for the second time in history, marking about a 1.6% gain. S&P rose about 0.5%, which has pushed our target up to about 568, so it's extending. I'd mentioned that a number of weeks back that I thought it would, just the look of it. We still could extend further than that. I would say 572 to 574 is viable, but obviously this flow will have to continue. I don't know that the Trump assassination attempt is going to affect markets. We'll have to see on that. I really just can't grasp that. Now, one thing with the NASDAQ, we want to be conscious of this. We're in our third mound on this squeeze to the upside. And note that, we didn't get much more out of the NASDAQ than the S&P for a close for the week, 0.06% or 0.6% or 0.6% or whatever that is. And, our primary wave 4 target is back at 465. So it has a potential of having a decent drawdown. So we could see some continuation into this rotation as well. And, the major factors in the tech sell-off, included buyback blackouts last week. That was probably one of the bigger reasons. Overbought conditions as well as the seasonality was kicking in. So those are just things that we want to be conscious of as we're moving forward. Now, next week we have some decent earnings. ASML on Wednesday. I'm interested in that. I'm also interested in Discover. Haven't decided, I'm still working on swing trade notes. Haven't got that far into it, whether I'm going to put those in there or not. I got to spend a lot of time. I'm getting a late start this weekend to look at stuff. So then Taiwan Semiconductor, TSMC, is on Thursday morning before the open. And Netflix after the close. It has potential for about a 6 to 7% move to the upside. I think DH Horton does well. Domino's, I think, is a little weak. Just sort of my thought, just from the noise that I've been hearing. Now, jumping back to banks for a second, I think U.S. Bank, Core, Discover, and Equifax do well. However, what we've heard so far from the banking sector, it's a mixed bag again. So now let's jump into the global trend ETFs, which really is the point of this article. Now, ILF, which is iShares Latin American 40 ETF. Yeah, a nice pop off of this low. Notice that we have consistently low, higher low, higher low, higher low, higher low, higher low. So this is really drive 1. This is going to be drive 2. It'll really be finished in here. And then we should continue up to our cycle wave 3. So we don't really have a lot to the upside, but I got a 32 count on this. I wish we had better options. I was going through all these ETFs and really drilling down the options because I like some of the charts, and they're just slim picking. So when it comes down to the ETF here, let me exit out of this. Probably a good point to scale in here just because of our price difference on common shares. Not a lot to the upside as far as on our wave 3, but if this gets a decent breakout off of this 32, 34, whatever that number is up here on this 5, this cycle wave 1, we could push the top of the Bollinger Bands up here to about 37. But right now, when I initial look, I didn't see any options that caught my attention. So let's look at the Invesco S&P 500 GARP ETF. Now this actually, Kirk removed this from the plug and plays, or I believe he did, and forgive me if I'm wrong, but that's my recall. I kept it last month because the count looked good, and the count still looked good to me. So now just realize my work is different, from micro and macro perspectives. Kirk is really focusing on the balance sheet and the other potential growth that a stock has, whereas I'm totally a technical guy. So I either got the count or I don't. We're in a primary wave 3, which is going to come in a little shallow of this 108 on this cycle wave 3 up here. So we still got about $5 to the upside if anybody's still holding, which is the main reason I kept this here. Outside of that, if you don't have a position, you could sell some 100 cash secured puts. I don't even know if you're going to get a decent price on those because the market's a little thin, but that's just my thought. It's not too late. On the top side of this market, it's going to become more and more challenging to maintain a decent level of gains in certain position trades unless you have a decent amount of upside in those stocks. I wouldn't classify this as one, but I would say based on this retrace and the historic retrace and how the look of this count has, as long as we don't close below this 102.21, whatever it is right here on this low of this candle, I think we're good. So that is how I would approach Invesco S&P 500 GARP ETF. The IPO, which is the Renaissance IPO ETF. Now we're about ready to break out here. Forgive me, I don't have my breakout line here. But 50% back of this entire cycle is up around 56.22. And I believe 50% back of this leg was like 50.33 or 50.34. So we have two 50% back counts up here to the upside. So this entire leg here down could get retraced if we start seeing, some activity in the IPOs, which we have. So, that just keep that in mind. The reason this came off is because there's no IPO, I think. So, all right, let's look at Vanguard FTSE ETF. All right, so we've broken out here. There's really no resistance up till $80 here. So we're at 77, so $3 higher, we're good. I wish we had some better strikes on the calls, but we didn't. August 75 calls have a 60% premium on those. So the spread is 60%. Steep, everything else was 200%. When you start seeing that across the board in a ETF or a stock, it typically implies that everybody is bullish. They think it's going to continue to the upside. So about the only way that you can really capture this is buy common shares here. We have some upside to 88. You're not going to earn any premium selling 88s. Looking at iShares 50 A1A ETF, our target wave 3 is around 79.85. So we still got quite a little bit of room. So $80 works. Again, this is another one. We don't really have a great number of calls it's only a 35% premium on the 70 calls, the August 70 calls. So it's not horrible. But I don't ever like entering in a trade when I'm 30% upside down. That's just my thought on it. So I would either look at common shares. I didn't even see any volume on any cash secured put options. So I think your only option is just to buy common shares. All right, now we started talking about real estate. Ooh, goodness. About 9 weeks ago, and we put XLRE in our June primary waves. And of course, it's going to stay there. We have gotten a nice pop off of this move here. So our 3, even though it will extend out, we're looking for a target for about $49 here. Premiums are extremely elevated. So here's another scenario. Any dip back to 50% of that candle scale is what I would be doing. So 50% of this candle is going to be about 38.20. Then we also put in the Pacer Industrial Real Estate ETF as well, the INDS. Got a nice pop on that one. Got the breakout overhead. Now, must say storage and industrial properties is about 40 or 45% of the revenue on this. And they really have not gotten hit in this yet. And industrials are seeing some volume. So if storage does well, if we end up with a lot of disruption and people moving things, there's a likelihood storage could pop off of, Burrow, for example, or our next hurricane. If it happens to hit the mid-Atlantic and swaps a number of states, people obviously get out of their homes. We have more people in the move. Mass migration are another thesis. So I think this actually could have some potential for some upside, which is why we included it this week and as well last month. All right, Wisdom Tree Emerging Markets Small Cap. Not a lot of FOMO, but we're breaking out again. I would say that we go to the top of the band, which is about 56.50 in that range, but we have a target up here on wave 3 of $63. I would expect some rejection, very much like this. Get up here, hit resistance, reject it, then we go back and put it in our high. So maybe we get up to our resistance here again, see some rejection back to the 61.8 fib, which would be about $52, about $1.24 below where we are. Count doesn't support that on the weekly yet. It supports more of a breakout, a little more, but this really isn't a euphoric grind to me. I mean, we had more of a push here, much more aggressive push here, much more aggressive push. And this is sort of meandering. It's sort of like this grind, but it's not on this slope, so it's not this, right? However, their Bollinger Bands argumentatively are somewhat tighter, but they aren't squeezing like we were here. See how they're sort of pointing inward? then we get that little pop to the upside. So I wouldn't say that a squeeze is in play on DGS here. So, but I would still look at common shares. Again, cash secured puts on any dips if you can find anything or get filled. And that pretty much is my thought, because they're thin, but they're not as thin as some of the others were. So I would look more at where we have open positions. I always want 1,000 or more open contracts, which in the ETFs, there weren't any of those. When I looked at them, we're talking a few hundred open at best. So good luck with that if you're going to try and sell cash secured puts, but cash, common shares is always your option when cash secured puts are not. So if you don't get filled, that's your choice. So EWA, the MSCI Australia ETF, right, heading towards our breakout. Now, the question here is, do we reject price at the breakout first, back down before we go? So, and I'm thinking here, set the high, lower high, rejected higher prices, and came down and tested trend support. We overshot trend support, which isn't good, because if we don't break out, we're probably coming back down to the 50% fib here at 21 bucks. So little more, complexity in EWA. I would like 50% back on that candle before I entered 24.30. But at the same time, it is showing some oomph, especially if China starts to buy again. So, but that's what we have for this week, folks. Great trading. Until next time.